So, good morning, everyone. Hi, Steve. Hi, Chad. Hi, everyone who is watching.
Hello, everyone. Henry, post FOMC. Lots to digest, my friend, and also lots of news today. Always excited. Let's go.
Yeah, wild day. One thing before we start, guys, always do your own thinking. Never trust anything we are saying. Steve and I are just trying to educate you to help you along the way. That hopefully you will make less mistake, learn one thing or the other. So please always do your own research and never listen to anyone. Let's go. So yeah, Steve, whew, what a ride the last couple of days, huh?
What a ride. Good morning, everyone. Morning, Perdia. Hopefully, everyone is ready. And I would say, Henry, this is deja vu compared to last FOMC. If we quickly just look at the charts, you know what, but like we could just speak about it. But yeah, before we get into the charts, you'll understand. I just want to clarify what I mean by deja vu. Some people, like this is post FOMC, and it's just very interesting how the market works. So much repetition, so much, you know, just areas of interest that come back in time. And whether we're living in a simulation, Henry, or what is going on, but look at this sell-off on FOMC. Marked it out here, my friends. What happened, on the overreaction, the sell-off, and look where we are, back into balance, right on next day's closing in on New York Open. You guys, you have to make this out. I don't know if you live in a simulation, you guys, but this. But the reason why I remember it so well is because we streamed it last time. We spoke about it. If I wasn't speaking about it and I didn't, I was maybe trading alone and not taking it seriously, possibly I wouldn't have, made note of it. But I made a strong mental note because we were laughing about it, Henry and I. And now look what happened. Price just came right back into balance during the pre-market session, floating it up on no volume. And it'll be interesting to see if we get the rejection or if we continue to the upside, Henry. So yeah, I just want to bring that up. Sorry, because it's just very interesting how the same thing happened as last time. And yeah, but before we get into the charts, you guys mark out the levels, areas of interest, and dive into why those areas of interest matter, and also maybe some strategies as to how you can trade the reaction once it comes to those areas. Let's get to the news, you guys. We have a lot of news that came out already. We had advanced ADP, core PCE, advanced GDP, unemployment claims, personal income, and personal spending. So just a flurry of news.
And I just want to say one thing. Do you remember? Was it last week or 2 weeks ago when I have spoken about GDP?
Yeah.
That if it comes in lower than 2, then we might see a narrative and rate cuts again, right? Because then the market will be like, oh no, so GDP is falling apart, economy. So yeah, whatever the Fed is saying, they might need to reverse it because they cannot let the economy go for like hitting the wall, right?
Yeah,
So
exactly.
and I think this has actually been also on acceleration today, for especially for Nasdaq, a part of a healthy bounce after so many days of sell off. I think that it might also be played a role there.
Yeah, like with all these numbers coming at you guys, remember, it takes time for the market to digest it. Even with PCE cooling to 0.1, expect a 0.2, prior 0.3. So yeah, big miss there, you guys. Advanced GDP index, surged to 6.2. So that was stronger than previous. And then unemployment claims, which actually was the number I was looking for, came in and printed higher numbers than previous, but lower than forecast. And then again, we speak about this before. We don't know where they get these forecasted numbers, why they raised it so high compared to the previous. But then again, it's still greater than the previous. That's what I look at. And the personal income rose to 0.2, and personal spending 0.3, which is a big miss as well. Well below forecast. What does this quickly mean, you guys? Softer growth, overall hotter prices. So this, you could say, is closer to stagflation, keeping the Fed on edge, which seemed he was a little on edge yesterday, and the market reacted after. Strong sell-off. And yeah, you guys just signaling demand is slowing, and support for the dollar is just getting sticky on prices, and then bond yields and risk assets will swing the other direction, which Henry will bring up, especially on the yields, and possibly the DXY, the VIX, see how they're reacting on inflation heating up and growth missing on these numbers, you guys. And let's just quickly go to the charts and see what the reaction is. And yeah, the market doesn't care. Look at the reaction. Print came, right around here, you guys, and we are up right now. And we took out the FOMC level from yesterday. This is the impulse level, I would say, the last 24 hours, which is most important because it was a heavy news. We had strong volatility where we had the overreaction, the pump on the rate, which was held. There was no rate or cut yesterday. So, market reacted bullishly. And then the Fed chair came in right around this area, had some strong comments, which we can digest later. And we had right around, I think it was about an 800-point sell-off, 900-point sell-off, sorry, about 3% on NASDAQ. And what happened afterwards? What is the current mood right now, you guys, with NASDAQ? We just slowly grinded up, took out the level. And now that all the news came out, pre-market, I say it was quite mixed, but more on the bearish side. If you look at the numbers itself, market doesn't care, Henry. It's reacting bullish. Buy side is on. NASDAQ is so far number one on my list as the strongest. And yeah, that's all that matters, you guys. So, before you're looking at your trades, before you're looking at putting on any trades, remember, you guys, plan for it. Have your pre-release set up. The first 60 seconds, okay, have your plan ready. Never dive into it just because the charts look good without analyzing the whole picture. Have a bias filter. That's very strong as well, just so you're not jumping back and forth, long and short. Know whether you are sticking to a long bias for the entire day and the stop loss. Have your trade plan, you guys. Have the checklist. Exit rules as well, whether you're trailing, cutting, or just a complete stop out, whether in loss or a profit. Always know what you're doing after the trades. The issue a lot of traders have is they have no idea how to manage their plan. So there's different strategies with that. There's no holding overnight, since this is prop firms. We're trading per day here. Know that the risk is to the end of the day. And we also have lots of earnings coming out today, Henry, as well, which I'm sure you're going to talk about, where we have Apple and I believe Amazon, which will be very interesting. But we all know what Apple's main driver is. It's the iPhone, you guys. There's nothing else. They're talking about maybe some glasses, but come on. There's no innovation. There's no really AI coming forward. It's the iPhone. That's their moneymaker. That's why they just, they keep soaring higher, is because people keep buying it. And that's all they care about, it seems.
But I already mentioned a couple of weeks ago that Apple might be actually the biggest winner of all by not investing into AI and basically just waiting it out and let anyone invest all its free cash flow in the AI infrastructure, and then they will just land at partially back for a penny on a dollar, right?
Yeah, they're not wasting their money.
And so, actually, Apple might be the biggest winner of all, because it's it didn't waste hundreds and hundreds of billion. And
and they know their cash cow. They know their cash cow is the iPhone. They stick with it. They're like, we don't need to reinvest, waste the money on AI, data centers, other technologies. And look what happened, you guys. Look at what happened since last earnings, since May, up about 22%. One of the strongest leaders in the Meg 7, you guys, so just keep that in mind. We have earnings, aftermarket, Trader 007. Good morning, my friend. Always having a great day, always focused. And Henry and I are ready. So just interesting. Just keep that in mind, you guys. If you're holding any positions into the close, know that we have earnings, and Apple is the clear leader.
Okay, Steve, let me before the open. We have 20 minutes. Let me make your market ranking, how it looks right now, just to see
Well,
how
no, yeah, for right now, I just have NQ as the strongest. The other three are about even. But yeah, NQ is a clear winner, you guys. So remember, when you're putting on the trades, always have your review. And when you're done your trades, always have your post review as well. Log your reaction and your expectation, you guys. Always update your playbook for the next day. Keep it professional. And yeah, sorry, go ahead, Henry.
no worries.
Yeah.
Let me, because we have quite some stuff to cover. So guys, first things first, Fed, right? And that's actually an interesting one. So the 30-year yield, it's basically the longest one that is basically Wall Street is watching. It's 2, 10, and 30, right? And 30 moved quite aggressively yesterday over the last couple of days. And what it did is basically, this is why I had the monthly chart here. We are now sitting on the highest level since 08, almost sitting on the highest level from 07. And people need to understand that right around here, like we had a major economic downturn and the whole crisis. And so yeah, therefore those levels, if it makes new highs over specific time periods, right, that had a meaningful impact on the economy, those levels are being watched. Just for you to understand, so basically, if you take a look at the dot plots of the Fed, so they are moved down, but much slower than the Wall Street has anticipated. And what it basically does is that over the long term, it's more expensive for the U.S. government to refinance itself and its huge, deficit that it's running, and it might even need more deficit in order to refinance the whole thing. So just be aware of those little things. And what else do we have? Meta, Microsoft. Oh, the big ones. Those are the big ones. Let's compare side by side. Microsoft, Meta. So yeah, guys, as you can see, basically opposite direction, right?
But you saw the headline, Henry, I sent you yesterday about Meta. Did it come to a surprise for you? Probably.
No, not really. I mean, at one point, reality will get back to you, right?
Yeah.
And actually, I mean, we have seen it with the metaverse. With Meta, was it 2 years, 3 years ago, when this whole metaverse project?
Why did they change their name? They should have just kept the Facebook, Henry. Why did they change it to Meta?
I have no idea. Yeah, I mean, they want to have like this group name, right? But yeah. And what we see here on the daily, so we are basically about to break our support areas here, right? So March, June. So March is now 5 months ago. And if this is broken, then we might also see the whole pattern being broken that we have been drawing or following over the last couple of weeks, month. And then we might see a move to the downside. So just be aware of this. And again, Meta itself is not big enough to move the NASDAQ, but the story behind Meta, like AI, infrastructure, CapEx investments, right, and especially the CapEx investments, been the main driver for NASDAQ over the last 2 years. That investing more and more money in the infrastructure and things like that. So at one point, if Meta starts to slow down, others might follow, right? Because then the whole narrative might shift from CapEx investments toward profitability. And that's actually funny, because that's the what happened to Microsoft, right? So Microsoft had a complete beat on its cloud business, and so yeah, it's actually making money from renting out AI infrastructure and providing the infrastructure.
That's
right?
smart. That's smart. Yeah.
And that's smart. Yeah. And so yeah, and I mean, we've been talking about Microsoft that it might have found a button at this point, and as you can see, we're actually sitting here right in a super interesting level that has been accepted a couple of times. So just that all of you are aware of. And if we manage to go above, then we obviously have this big level here, but my assumption would be something like this from the bull side. If we're not able to break through, and let's say we stick around here in this area, but then we fall again below 430, then it might be another move to the downside. But for the time being, it has a positive impact, right? It has a positive impact on Nasdaq. It's some good news. So people are like, I mean, Wall Street is always picking what it wants to focus on. So it's like, yeah, Meta, all right. Oh, let's focus Microsoft. Hey, let's go, right? And therefore, the big driver today is definitely more Microsoft than Meta. And to be honest, Meta, like nobody expected it to have great news anyway. So it's like kind of confirmed that's going to be bad. And then it's just like, all right, no surprise there, so to say.
Yeah, aside from their ad revenue, Henry, what would you say is their major, revenue booster? Because of course they saw Facebook, lots of businesses using their platform for advertisement promotions. But aside from that, because they're not even really in the sales business, the physical business, the movie business. There's not much else that Facebook or Meta does because they completely escaped the whole metaverse, like you said before. They invested billions and billions of dollars, the best engineers, and they came out, I think, a few months ago where they completely cut out that program. So I don't know.
Yeah, no, but I mean, I think at one point they will need stronger to focus on the existing, like on different products, right? To create some new ones, and they're trying. It's just like that nothing works. So basically, they bought up WhatsApp, they bought out Instagram, and like they were not able to produce anything significant by themselves. So I'm really curious to see how it will work out.
And they almost bought out Twitter. They offered the Twitter owner years ago $500 million, and he declined. So that was very interesting as well. And yeah, like you said, they just keep trying to buy out companies and no innovation themselves.
Yeah, but that's basically for the time being. That's the play, right? So be aware of the downside on Meta. Be cautious with Microsoft. And Apple tonight. I mean, Apple being obviously super bullish. And let's see how it looks for Amazon. Again, Amazon sits right in its upwards channel. So if you want, it's basically sitting here. It's the 50% zone. So currently gap up, how much? Almost 3.6%. I guess people are betting that if Microsoft had such a strong beat on its cloud business, that Amazon might also get a good beat on its AWS services and its cloud services as well. So I think that's the play there. And yeah, what else did we have? Microsoft, Meta, Fed, GDP.
Well, FOMC, that was the big one. I don't know if you saw the comments, Henry, but the moment he's not sat down, but stood up at the podium, started unleashing his comments, the market reacted right away, and it was just straight to the downside, 800 points. It was a wild ride. I had a watch party. I was observing. Nothing else, Henry. I don't know if you put on any risk or any trades, but but you don't have to, because you see all the stats, you see the prop firm stats. Imagine the people trying to long each level after he started making his comments, and people just kept getting stopped out because there was no bounce. It was just straight down reaction. I don't know if you can zoom on even just the 1 minute chart.
I had no time to watch the whole thing, but I basically, once the press conference stopped, 1 minute before, I just opened the charts to see how it goes, and then it's like, on the ticker, press conference stopped now. It was basically the turning point, like V-shaped down, bam. That was funny.
Yeah, like he was crystal clear. He was saying 2% is the target, the only target. There was no soft version, and the market didn't like his soft version. And I was watching the order flow. I was watching the orders getting filled, and there's always going to be large orders getting filled. But every time a large order was getting filled, it was getting smashed through. It was a party. I enjoyed it. Hope everyone else here enjoyed it and didn't get involved, unless you're on the sell side and you saw your signal. You're like, you know what? I hit my level to the top side. I'm going to put a short, trail it down. A lot of money was to be made, but a lot of money was probably lost as well.
Yeah, it's basically the whole move, right?
The whole move.
Yeah. Always 900 points. So it's crazy. And I mean, it's also what we're always preaching here, guys. Always have stop loss in place and adjust your risk. Because as you can see, it's like 1 hour and 6 minutes. It's almost 900 points. It's crazy volatility. So if you don't have a stop in place, you can also just say goodbye to your account right away. And yeah, therefore be always super careful with that. He didn't say. I just read some comments, but to be honest, it was nothing worth mentioning in my opinion. So it's basically PCE. It's not the only indicator we're watching. We're watching many other indicators along the way, right, and stuff like that. So, by the end of the day, they're also just reacting because they don't want to break the economy. They don't want to make wrong moves. And just one thing on the 1 minute side, you can really see how we're just grinding up inside this channel, right? So it's basically just an arrow channel that goes up today.
Yeah, it's just an algo, just the algo.
Yeah, maybe who
buy
knows?
up, yeah.
And some big order getting distributed. I have a fun thing to show actually. So guys, as you know, I always draw many images here around the charts, and I've been talking about the support area here, right? The previous all-time high, and now magic,
We hit it. Yeah.
Where do we open? Where do we close and where do we open? Right inside. And actually, it's funny, right? Because I circled the area yesterday. So if you don't trust me, guys, review get a review from yesterday in the video. And so I circled the area yesterday, and as magic, it bounced right from it, right? And so
yeah, it's the first retest because we squeezed out of that zone. We never had a real retest. This was the retest. It happened on FOMC of all days. It just,
and it's also
how that happens.
And it's also quite a big move, right? It's like 1,400 points, basically on a straight line down.
Yeah.
So it's, what is it, like 5%, almost 6% move in a straight line. And given how the markets move in the last couple of years, that's quite a significant move for NQ.
And it's interesting because the bounce happened right on the days open. So we never, if you look at the candle on days open, there's no retest. Just the algo turned on and no one was selling. Very interesting.
Yeah. And this is how it works, guys. So if you want really to learn one or two things, just follow us, subscribe, turn on the notifications so you get notified once we go online, and then just follow along and see what we're doing. And with time, you will get a better feeling for the structure of the market, for the areas and the zones. And again, like, yes, we are intraday traders, but if you know that the market did close into a strong support area, then, and you have like in your system, in your playbook, in your game plan, you have written it out like, right, daily close and a big support resistance area, next day, higher probability than usual for a bounce, for a rebound, right? And it's not magic. Those things just happen. You can just backtest it yourself, see, watch big levels. I mean, you see how I'm doing it here, right? It's not magic. It's nothing fancy. It's always worked, always will work. Some things might work less, others will work more. So it's always a back and forth. But as long as there are human psychology involved, and there will be always human psychology, because even the algorithms are built around human psychology and supply and demand, at those things work. So yeah, but where do we go from here? Well, now it's going to be actually super tricky, right? So we're opening in 6 minutes, and we're opening right in the middle of the range. So basically, let's say this is our range here from resistance to support. We are opening basically right at the 50% zone. And that's a tricky one, to be honest. That's a tricky one, because from here, the market can do anything. It can rally another percent, it can bounce, it can just do nothing, die out in the range, even move back and retest the lows, right? So moving both ways. So I hope there would be an easier start of the day for you guys, but sometimes it's how it is. And I personally, if I would trade, I would watch out this zone. So I would watch out this break. So I would, for a long scenario, I would like to have like a breakout of this trend, of this range, and of this channel, and for downside similar. And then just like don't expect wonders, right? So don't expect like I don't know, 200 points move. It can happen, might happen, we don't know. But at this point, it might just chop around, might take out. I would say this high here has a reasonable chance. Is it yesterday's high?
That's the FOMC high.
Yes, of FOMC high. So as
Yeah.
Steve
So
loves
lots of volume entered that time, that area of the days, you guys. So keep that in mind. When you're looking at highs and lows, make sure it has lots of significance. Make sure it had a strong headline, and there's no stronger headline than FOMC. So keep that in mind. That's the FOMC high.
So if you want a target for a long, it's the FOMC high. Then watch it carefully. Do we break through strongly? Do we bounce upon it? And then you can just play your style, your system as a mean reversal trade, a bounce trade, whatever strategies you have back tested. Be aware of these, right? And downside is tricky. What's the target for downside? Obviously the lows, not sure. Can happen.
It's just the highs and the lows of FOMC, I think. To be watching. Yeah.
So, but again, right? I don't know. Nobody knows where the market will go, but it's also not our purpose here to tell you which way the market will go. It's more about that you're aware of these levels and that you might see some significant movement around, impulse movement around those areas. Okay, that's Nasdaq. Let's see what else do we have. PCE, I mean, you touched upon, nothing too fancy. Yeah, maybe one word to advanced GDP. I don't know. Like there was a time back in the day when GDP overall had a significant impact. I have the feeling that it was Biden 4 years ago, 3 years ago, we had a couple of quarters with declining GDP, and it used to be a signal for a market downturn and whatever, for a recession, right? And then just Wall Street decided, oh no, 2 quarters is nothing in terms of numbers, and then it just pulled it. And so I think for many people it lost its significance.
It makes sense. It makes sense because we have the whole AI push, Henry, right? We're overspending, we're over-investing into AI. It takes time for the investment return to come back where it actually generated revenue. So I feel like it's going to be a few years, Henry, until we actually look at GDP, because now we're pushing to the whole AI narrative, the data centers and everything. And then once, over time, naturally, it's like, okay, now we got to really see if the investment has any return. And slowly, it's creeping into markets that the return is not as much as they expected last year. So we'll have to wait and see.
Yeah, but the problem is, like, my personal opinion on this one is, if you take into consideration that, like, already 3 years ago, once all the checks from COVID started to run out and the low income class completely tapped out their credit cards right now, like since last year, we're talking more and more about middle class is basically completely tapped out on its savings and is running low on cash. And with all the inflation that happened over the last 10 years, and the salaries didn't catch up, right? Didn't increase enough. So my question remains, with all the AI boom, yeah, I completely agree that it's game-changing technology and all those things. But by the end of the day, who will pay for it? Who will be willing to pay those kind of amounts to justify the investment? Because you will not be able to justify $100 billion or $500 billion investment for just one company by letting people pay $20, even $50 a month, right? It's how many will do it? Not many, not enough. And
exactly. Yeah.
And then
it needs to benefit the consumer. Okay, sure, it's going to benefit businesses, but if it's not benefiting the other end, then who's gonna pay on the other side, right? Because if the people aren't benefiting on the other end, where it's increasing their quality of life, increasing their cash base, like Henry said, then businesses will start failing because consumers will stop paying for certain services, and then businesses start failing, and they'll have no reason to implement this expensive AI. And we have New York open right now. Market open. But it's time will tell, because it has to benefit both sides. It has to benefit the consumer and the business, not just only the business.
Yeah, but that's and then the issue remains, once the LLM models are getting so strong, AI is getting so strong that businesses are willing to pay for it, like huge amounts of money, because it really helps their productivity and they can get
Sure.
rid of the people, right? Then the question remains, all right, if AI is able to replace so many people, then how will you place them back? How will you be able to place them back in the market, right? In the labor
Yeah.
market.
How are you going to
So
put
it's-
money into the people's pocket then? Because if people don't have money in their pocket, then the businesses will fail. They have no reason to pay for these services, whatever the business are trying to do. So
And so yeah, and it's a tricky question, right? I don't have an answer for this. I just know that back in the day with the internet, people were also worrying, like, all right, internet will disrupt everything, and by the end of the day, it extended the overall GDP of society. So I'm hoping for the same effect on the AI side of things, but I'm
come on, Henry. People tuned in because they want the answer. They want the holy grail from you. You must have the answer for them. Come on.
I shall have the answer. Yeah, unfortunately, 10 years. Yeah. Unfortunately, I don't have the answer. All right, let's take a look quickly before I dive into the intraday setups on oil. Yeah, basically, we're not able to to tap into our range area here, so bounced right in front of it. And that's, guys, and that's super interesting, right? For me, it's also one, like, it's also a little bit of fun thing to watch. Will it break through the level? Will it not break through the level? But if you know that there's a level, you just zoom in for a minute, 5 minute, minute candle charts or whatever chart type you use, and then you just okay, not just, but then you watch out for toppish formation and you try to figure out, right, does this really looks bullish, right? Or is it more, does it more, shows you that the market is not willing to break through, like 1 time, 2 times, 3 tests in the same area, right? And if the market is not able to pass through a level over a certain amount of times, then more times than not, it will do the opposite and go the other way around, because it, like, okay, right, I cannot go this way, it's blocked, so I will try the other way, right? And this is how the market moves. So yeah, just be aware of it. And as you can see here, we are basically just turned around 20 ticks, 20 ticks in front of our range area. And yeah, and this is why I'm never tired of showing you the big picture levels and those kind of things, because they do matter on the intraday level, even though many people don't want to consider it, but they do matter.
They do matter, and you can also trade it. And you Henry probably sees with Purdy and prop firms, a lot of people do trade oil when it's the good opportunity, when volatility is high. Volatility has shrunk a little bit since the last move, but there are still traders out there looking at commodities, looking at oil, or just put oil on their charts. I always have oil on my charts because it is the great inverse right now compared to NASDAQ and risk on. So you guys always have to keep that in mind. And yeah, interesting reaction actually from oil. I'm looking at FOMC, but then again, yeah, it is still post FOMC, you guys, a lot of earnings. So I feel like oil will just consolidate the next few days because money is going to flow into those assets a lot more aggressively. Because actually, I looked at the news and I didn't see anything involving oil at all. Headlines in the Middle East. I don't know if you saw anything, Henry. Or if
yeah,
we're taking a break today. A pause.
Yeah, I mean, they have been waiting. Let me shift back to oil. So there was the funeral of Graham, right? And so they waited for the Graham bill to pass the Senate. It did, but it was watered down from its initial draft, and also like with the secondary tariffs and those kind of things. So it kind of cooled down the whole situation. The people were less afraid of huge impact on the oil side of things. And I think for the time being, as long as it's not further escalating in Middle East and the Houthis don't close down the Red Sea completely, and there's like some traffic goes through there, and the oil keeps on flowing, then there will, like as I said last week or so, was it last week? I think so. We'll probably stick somewhere around in this area, right? And but if it escalates and the Red Sea is getting closed, then we will see the big move up, the second, third leg, however you want to call it. Then we will see the big leg up. And as always, or as many times, chart patterns and news line. It's happens many times, so be aware of this, guy. So if you see a pattern evolves and it looks bullish, and then once the news came out, then you know, all right, it was basically the trigger for the or other way around, right? Sometimes because people know,
or priced in.
people who know people that some things might happen, then they already start to push the price up. So again, never trade your opinion, trade what's in front of you. And if you think, let's say like yesterday, right? I mean, it's the best example. It's the best it's the best example yesterday. If you think, oh, that's bullish, right? The market is bullish, they will do whatever, and you just blindly trade your opinion, but the market shows you, all right, I'm going down. And it's like you can put on EMA 9, 14, 20, you can draw a trend line, right? And sometimes it's at as easy as this. Just like don't fight the trend, and the trend here and the short term is downwards, so don't fight it, just stick with it, especially after big news. You have a huge momentum plays because big money is being shifted and repositioned, and then you get those huge 100 like 1,000 point moves or 500 point moves.
Yeah, Henry, if I could, I just want to extend on that just quickly on.
Yeah, show me.
I just want to show you guys. Yeah, just give me a second. Yeah, just what Henry was showcasing there. I just want to add on a little bit where he showed just the chart from FOMC from yesterday. You guys, Henry was like lining up where we had the bullish push, and you're thinking, okay, this is my measured move, and I want it to go up another, let's say how many points that is. We need to zoom out a little bit, you guys. We are intraday traders. Where were we? We were in no man's land. We already took out the highs. And now if you're looking for, okay, another momentum push to the upside, you need to zoom out even more and look at yesterday's, last week's, last month's levels. And that just becomes a little overcomplicated, you guys. That's the issue. So why are you looking, okay, and you want to follow the trend, that's fine. But that's why you have to be a little more patient. Wait till price comes back into the intraday range. So if you're having targets, have your intraday targets. So wait till price comes down, let's say in this area, then you at least have a target up to the upside where there was plenty enough supply for your long bias. And they're able to, let's say, just for an example, this is your measured move. If you're patient, you let price come down, but let's say if there wasn't a lot of volume and not enough, good enough push, then you're not caught offside. But at least you have a target from your entry to the top side and also your risk to the downside, and then you're completely out. But if you're entering up here, no man's land, you guys, and you're looking at levels from yesterday, from last week, that's becoming a lot more difficult because, you guys are intraday traders and you're swing traders. Stop looking at last week's or last month's volume. Look at intraday. That's why Henry and I always say, be patient. Let price come down to a certain level where within the day, you have targets that if you're staying to the long side, you have a nice supply area where you take profit or start trailing. Because if you're overextended and you have no areas where you like to take profit for intraday basis, then stay away and let price come down. And if there's clear, stronger sell side pressure, then maybe you flip your bias and look at other indices. Sorry, Henry, I just had to.
No worries.
Because this always helped me, where I always have my target to the upside, I always have my target, I always have my stop loss before entering a trade. I'm not just blindly thinking, oh, we're gonna keep going to the measured move, take out yesterday's or last week's highs. No, guys, that's when your probability starts to decrease once you're trading. Sorry, go ahead. I just had to mention that.
No worries. I just want to add one thing here. So the biggest issue that I have seen over the years from so many traders is basically that people are like, if you expect to trade FOMC or any other big event that's in the evening, right, or press conference or whatever, and then you're trading for the whole day, and it's usually more times than not, it's a choppy, volatile day. It's like only rarely that it sits in a small range. Usually it chops all over the place, and big money is getting moved. So let's say you start the day, you just open, you're bullish, right? You're getting smacked here, chop upside down, all right. Then the market moves down, all right, moves down, reversal, right? Goes up, you're still bearish. So like, all right, you're getting smacked, all right, you turn bullish. You make some money, comes all back. You're like, okay. You make money on the bullish side, but then by this point, you're already exhausted because you have been in the market for like 6 hours, 5 hours,
That's
7
terrible.
hours, right? Yeah, and you had like, in best case, you only had 2 free trades, but in more like, and usually people would make at this point like 15, 20 trades, right? So they're exhausted, and they're also mental. Like, people always underestimate the mental capacity. I have known some guys are like, no, I need to function. I'm like, it's not upon you to decide to function. It's like, it's exhausting, right? So you need to reserve your mental capital there. If you know that there's a high volatility event coming, then you need to preserve your focus, you need to preserve your energy. And many people don't even make a break here, right? They don't like even make a break for 2 hours or 1 hour, like going for a walk, taking a nap, showering, whatever. They just trade through, and they're sitting in front of it, and then they're bullish or bearish, getting smacked or riding it up. But then the market turns, and then it's like they're getting stopped out. Then that, oh no, all right, let's go bullish here. Then they reverse to the bearish side, might be making some money, but by the end of the day, more times than not, from what I have seen, people would lose it all or have like a big negative day. And so the one thing I want to say, guys, if you want to trade big events like FOMC, either just trade in the morning and then have a huge break before the event itself, so you're completely non-biased up when the event is coming. So you basically just turn the charts, so like, right, what are my levels, where the market might go, because anything can happen at this point, right? It can go be like just reverse anything intraday. Like, it can look like the best chart pattern whatsoever, but the initial volatility and liquidity might be so high, so it just goes in any direction and then it reverses, as we have seen here, right? And if you're mentally prepared and you're calm and you focus and you're in the zone, then you will be able to see like, all right, market doesn't want to go higher, it reverses, right? And let me quickly show you this.
Hey guys, like, preserve your mental capital. The markets will always be there, and you'll see in live journal your thoughts and your emotions on days where you had the build up, you took your setup once or twice, closed it down, journal that day comparatively to other days where you overtraded, you FOMO'd in, and then you guys, I get it. You need to endure these losses, a little suffering, so next time you remember those losses and you remember when you suffered on those days where you blew your accounts, or you blew your buffer in your funded account, which is the worst. And Henry and I, we can talk some strategies later on of comparing the challenge accounts to the funded accounts where you build your buffer, and you trade them completely differently, because naturally, yes, you are going to be a little more aggressive on your challenges because you want to pass. But once you get to that funded stage, you guys, you slow it down, you focus as a business, as a professional trader, not a gambler. But sorry, Henry, go ahead. I just had to, I always got to bring that up.
No worries. No, it's not. I mean, it's a valid point, right? We're talking about this all the time. So for the people just to slow down, to de-risk, de-leverage, reduce the size, increase the stop loss. So yeah, and basically, just what I want to say. So let's say you're bullish here, right? Market comes back, you might stop you out depending on where you got in, might stop you out. You're like, all right, it goes down, you're getting smacked, it chops around, you join in on the party, ride it all the way back up, take a profit, like, all right, I want party to continue for a second leg. The market does nothing, reverses, and then at one point you need to cover, or you have hopefully a stop loss in place. And this is where most people are getting too attached to a particular path, right? So like, oh yeah, it's bullish, so it will continue bullish because the initial momentum has been bullish. And that's what they need to understand. So guys, if you want to get a big takeaway from today, during big news events, there's no, or rarely there's such thing as that initial move who will continue. If we're sitting like in a bullish scenario where we are like on a daily, weekly chart, we are like super bullish and everything is just heading up, then if you have a bullish impulse, then the odds are high that we will continue on the bullish trajectory. But if we have seen a sell-off of over 5-6 days, and anything can happen. It can go down for another couple of percent. It might reverse, right? So therefore, that's the reason maybe for some of you to understand why we are preaching so much the big view here, the big candle, because this makes a difference. That's what we're always saying. And you see, when we started the stream where we're sitting at 1.7%, now we are 0.7% higher, right? And again, we don't know how far it goes. It might pop another 2%, right? Because people say like, oh yeah, Amazon will surpass and Apple will be bullish and everything is fine, everything is cool. GDP is cooling down, so they will not be able to sustain this hawkish stance, and we might see sooner than later the rate cuts. So therefore, pushing down the 2 yield, and 2 yield pushes down. So you see, guys, how it works, like everything. And then Trump comes out and says like, yeah, we're negotiating with Iran on the new MOU 2.0, and then gives initial push up. So yeah, and that's important for you to understand all the interdynamics of the market, because once you're aware of it, you will not be sitting there like, okay, what's going on, what's happening, why do we move so much? But then you will understand that each piece of the puzzle is basically gives additional fuel to the fire, right? Either to one, like to the bullish or to the bearish side.
And here, just letting you know, we're a few points, right about 60 points away from the FOMC high. Nasdaq still looking as the strongest, where other indices barely took out their FOMC level from yesterday, but now Nasdaq is moving in towards the high. So just letting you guys know, strong bullish momentum, and do not fight the trend. And oh, look at that! Is that a scoop? Oh, SpaceX is starting to find some volume now. Interesting.
Yeah, it's basically setting in a range here. Setting in a range. Yeah. So yeah, just some fun thing to show us. All right, guys, I give it over to Steve. Yeah. Oh, Microsoft, I didn't see 15% up. Crazy. I mean, at one point there's also a short squeeze in place, right? Because it's been sold off so heavily, basically 1, 2, 3, 4 times. So there must be so many option and other shorts sitting.
Yeah.
And then the brokers, if you have like such a huge momentum shift that was not being priced in, all the brokers need to change the gamma, and then you get the gamma squeeze and all kind of things, and then it just like keeps on popping. So if you see something like that as tending, it might be never shorted, right? Because you don't know how far it goes. It can easily, like, yes, we have here a major resistance area, but who knows? Because then you have here the gap close. You have here, it can, like, you have here prior support. You have here the highs, right? So, okay, I don't think personally that we will go up to the highs, but like what I'm trying to say, you don't know when it stops, and so don't try to predict the bottom.
Yeah, it'll be interesting too, because with Microsoft and futures, now CME, you're able to trade single stocks. And will they be able to match up the volume, Henry? Because with these huge gap ups on stocks, the futures market isn't used to it. The futures market, they hate the gaps. They hate the imbalances. And before, the reason they say why they didn't, years ago, they never opened up single stocks on futures because they didn't have the volume. And now they say they have the volume. So the question will remain how those will trade. And of course, prop firms will introduce them as well, Purdy as well in due time. So you guys just be aware on earnings and be careful, because once we have these huge gap ups after earnings, layering into futures market, you will have to really measure your risk management, and just be very careful how you trade them.
Yeah, but here I want to highlight this thing, right? So I have drawn it beforehand, then US Open, and look what we did. We were not able to get out of any side. We were not able to break to the downside. Touched it, you see? Just touch here. Touched it here. So basically trend line has been accepted. And then it's just market always loves to go the way of less resistance, and if the momentum's to the upside, it just floats along. So yeah, be aware of that. And yeah, we'll more likely than not we'll see our FOMC high hit, but you can never be sure of that. But yeah, it looks like this it will happen. All right, guys, that's from my side. I give it over to Steve. And
yeah, thanks, Sidney. Yeah, it looks like we're going for the FOMC high, you guys. We mentioned it before. This is what price markets like to do. They like to reach these areas and then decide in no man's land. Yeah, we just look at that, and we just surpassed it right now. Important, but important highs and lows, you guys. I made this mistake in the past too, where I was looking for daily lows, even intraday lows and highs, but I thought they were all the same. No, they're not all the same, you guys. This is the FOMC high. If this was just the London high or an Asian high with no volume, you cannot expect the same rotation.
US doesn't care. Like 90% of 95% of the time they don't care.
Yeah,
it's
exactly.
Just.
But now that NQ is the strongest, as I have it on my ranking, this is the rotation. Took out the high. Let's look at the other indices, you guys. Actually, you know what? Before we look at the other indices, let's just look at the ratios quickly and just make sure everything matches up and beautiful. Because NASDAQ is the most aggressive, this is why I have the calculation here. NQ over ES, over Dow Jones, and over Russell 2000. I like to see that all three are moving in the same direction. But a lot of times they are not, like yesterday, where two other indices were neutral and Russell 2000 was actually shifting away and being more aggressive than NASDAQ. That's something I keep in mind and mark out as my setup. And I took some entries on Russell instead of NASDAQ the other day. But now that all indices are lining up as NQ being the strongest, everything making sense now. Let's go back to NQ. Yeah, we took out the highs. Now question remains. Took out FOMC, but will this be rejection or will we blow through, consolidate, retest, and continue the march forward? So let's just quickly look at the risk, the upside, you guys. We got the push, and let's just measure out some areas. We have the FOMC high. Just give me a second here. Give me a second, Henry, and let me see where there was the New York Open from the other day. Yeah, it's still quite a ways away. pretty big gap, pretty big pivot. However, if we see momentum, strong enough momentum, I wouldn't be surprised if we took out that area. But then again, yeah, this is pretty big gap, you guys. A lot of points to be recovered. And you know what? I think I'm just going to be more conservative, not as aggressive. This is my pivot. We already took out the pivot, you guys. And I'll just measure out the highs from Monday. And this is right around the close. But you know what, you guys know, I'm going to be more conservative. This is my pivot. I want the retest. Markets are being very aggressive right now. Quickly just measure out now the measured move, where we could see further to the upside, because the algo is just in control right now and you cannot stop it. So yeah, do not fight the trend, you guys. If I'm looking for short ideas, I'm not looking at NASDAQ. A lot of you guys thinking, you know what, NASDAQ is overextended. Naturally, as humans, we want to short it, but I think the opposite. I made the same mistake in my past, you guys, as a trader. But now I always flip. I do a 180 and think, no, I'm not going to think as my older self. I'm going to measure out the rotation, how money flows. And since money is flowing so aggressively into NASDAQ, I'm staying away on the short side and would only look at long. So these are my pivots right here. I'll just quickly measure the risk to the downside, because anything can change. If I'm not seeing any ideas for the next hour or two, momentum can always shift, you guys.
And just one thing to add. The current two candles, guys, look how they're getting extended.
Yeah.
And if you compare them to yesterday's down candles after the FOMC, like 1, 2, 3, 4 long candles. So if you make the assumption that the market is getting over and overextended at one point, there will be a short squeeze, because you can really be sure that after over each high, sitting many stop orders from swing traders, from options, from CFDs, from whatsoever. And if you see a momentum like this, then more times than not, there are additional 2, 3, 4 huge candles that are getting longer and longer. And this is how we end up with a +4, +3.5% days, right? That's what Steve means. So I did the same mistake when I started out. It's basically, Nasdaq being up 2.5%. Oh, it must be a high. There's a resistance area, and just keeps on going and going. And you could have easily be bolted there and with a small stop, and it just keeps on rising. And so therefore, guys, don't make our mistakes. Try not to fight the trend, especially not if the market is already up 2.8%. It's definitely the wrong day to fight the trend.
And if there's no pullback on Nasdaq, you guys just be patient. The pullback will always come. Maybe look at the ES if ES is strong as well. But for now, I'm not fighting the trend. Keep it simple. I'm always looking for either alignment in indices or a divergence. And there's a clear divergence because I have Dow Jones as the weakest. And let's look at Dow Jones right now. And we haven't even taken out the FOMC open from the other day. So this is something to keep in mind. If all 4 indices took out, and we've seen this before, where all 4 are aggressive, and there could be money shifting out of gold, out of oil, out of bonds, and all into indices, then I would have to be a little more patient because I want some sort of divergence where I pick up the strongest and the weakest. But on days like this, it makes my life a lot easier, guys, because Dow Jones is clearly not moving the same as aggressively as Nasdaq. And let's just quickly point out the levels. So I readjusted my levels because the FOMC high and low, we saw lots of volume flow into the markets. Strong sell from yesterday after Fed Chair Warsh came in and made his remarks. So this is a good enough level for me, you guys, because there's a strong headline. And I just point this out as the risk to the upside, measure it out so I can get the measure to the downside on Dow Jones. And it's right around the low of New York right now. So we have not much. Sorry, guys, let me just readjust this because this is actually lining up with New York Open. And I like New York Open a lot better because it will give me a stronger pivot to the downside. Doing this live, you guys, remember. So just give me a second. Give me a moment, Henry, because I like to speak about this. So I'm also making a stronger mental note in the future once I'm starting my trading day for today. And this is the risk to the downside. 51,811 and 52,490 matches up close to the highs of FOMC as well as New York Open from the other day, and to the downside on that pivot. And I just want to zoom out and make sure, look at this, perfect. Always zoom out, you guys. My second confirmation on these pivots, making sure, okay, if this is a demand area, did it also have strong touch points from previous days? And on Thursday, we had a strong touch point closing in on that day, which a lot of you guys know, at last 15 minutes of the day has a lot of volume coming to the market as well. And look, beautiful. A lot of touch points here as well on June, on the 23rd, as well as the 21st. So lots of areas of demand that are lining up. So that's my risk to the downside in Dow Jones, you guys. My list is still live, and this is what I'm looking at. So, let us know, you guys. Any questions? Which indice you guys are focused on? Whether you're looking at plays of divergence, alignment, or you guys are trading something completely different, like gold and silver, which have some confluence, oil, natural gas, and the dollar, the DXY, which have some conviction together as well. So let us know, you guys, what are you trading, whether it's pre-market, the opening range. For me, I'm always waiting for the first 30 minutes to play out, and that's what we're getting right now. And look at the strong closure that we're getting, Henry. Let's just quickly look at the 1 hour. 1 hour, very bullish. And an important candle, not a candle I look at too often, but just for fun, Henry, let's look at the daily and look at this. You would call this one of the strongest bullish engulfing candles of the day. It's the daily bullish engulfing. I'm not saying it has to play out another 800 points, but just very interesting to note, as well as the open where we're mentioning before, right when the days opened, we had that strong push, the algo turned on, and we never retested it. So just keep that in mind, you guys. A lot of times when you had these candles, I don't like to look at candles too often, but whenever we have these candles without a wick, 99% of the time that non-wick candle, especially on the daily, will get retested. I'm not saying it's going to get retested today because we're already bouncing 900 points, but at some point, the market is going to want to fill this. I would call it, this is also an imbalance of the market. So yeah, just keep that in mind, you guys. You can also use this in your intraday basis. When markets have these overreaction, price likes to come back, retest it, see if the overreaction was valid, and continue forward. So yeah, just keep that in mind, you guys. And that's the daily on NASDAQ. What a candle that is. What strong momentum that is. Always keep your plan in check. Keep your checklist in check. Write it down. Pen and paper, like we spoke about before, or online on your PDF file. Keep it professional. It doesn't have to be an entire notebook, even just one page, you guys. If you're treating your 9 to 5 professionally, keeping notes, keeping emails, everything aligned, keep your trading the same. And yeah, just make sure you have that professional path going forward. And yeah, that's all I have on mind. Henry, we got the 1 hour close as well as the half an hour close, strong bullish momentum to the outside, and I'm off on my trading day, my friend. What do you think? You're on mute, my friend. Oh, Henry's on mute.
No, I just want to say I think it's a good way to end the stream. So everyone, be careful. Never listen to anyone. Do your own thinking. Do your own testing. Only trade the things that you are aware of, that you understand, that you have tested, that you have designed the system around. So if you want to learn more, subscribe, link in the description down below. Subscribe to Podia, turn on the notifications. Check out Steve's email. You can hit us up on X or any other social platform. Just leave us a message if you have any questions. Leave a comment down below. Leave a like. And yeah, turn on tomorrow, again, 9 a.m. to our pre-market show. Market start.
Yeah, before the bell, you guys.
Before the bell. And yeah, I wish everyone a good day. Be careful. A huge volatility. Always have a Financial Juice or Forex Factory open so you're aware of any upcoming news or anything that might happen. They are both good in this regards. And yeah, have a good day. Trade safely. Thanks for tuning in and stay safe. Steve, thank you. And
thanks,
everyone,
thanks, everyone.
have a good day. Bye-bye.